So, today I want to talk about a labor issue that is slowly unfolding as the United States starts to move towards a reopening. There's been an argument amongst many business leaders and certain state governments that unemployment insurance has been a contributing factor in creating a worker shortage. The arguments of these business leaders basically boils down to the idea that unemployment benefits have created a lack of incentive for people to find work due to how much money people are getting. This idea has actually led state governments such as New Mexico and Montana, as well as Republicans across the country, to seek methods to undercut or remove unemployment insurance and to help foster and create what is in their worldview the incentives for people to work. The issue with all of this is that none of this narrative is true, nor does it really make much sense. And I hope to show this by first and foremost showing that extra unemployment insurance money has contributed in no way to affecting employment growth. Far from being this large scale unemployment issue, it's actually only certain types of jobs and industries that are dealing with issues of filling positions. These positions are typically extremely low paying jobs that do not provide a living wage. Specifically, we're talking about restaurants and service industry jobs that require people to show up in person. The reason for this appears to actually be twofold. First is that people who are receiving pandemic-related benefits, including unemployment insurance, that have had temporary safety nets with much fewer restrictions than previously, have had time and an opportunity using that insurance to negotiate for better paying jobs because they've had more time to look for jobs. Secondly, there has been a shift in consciousness, as the pandemic has created conditions where people are reassessing their workspaces and their life priorities, including assessing the benefits of working from home. So let's break this all down. So many business owners, as I've talked about, have claimed that unemployment insurance has created the incentive that is artificially creating this scarcity of employable people. However, there's been studies done that actually conclude that this is in fact not the case. And I want to share with you the conclusions of a paper from the National Bureau of Economic Research that confirms this. So the paper in question is Aggregate Employment Effects of Unemployment Benefits During Deep Downturns, Evidence from the Expiration of the Federal Pandemic Unemployment Compensation. So this paper essentially looked at the $600 boost to weekly unemployment insurance benefits that occurred during the course of the pandemic, and when that money actually disappeared for a very short period of time during the moments of recession during this pandemic. So there was a short span of time where that $600 was removed. So the author of this paper ended up going through an argument that basically broke down whether or not any of this affected economic growth and whether or not this increase in payments did anything to that same data point. So if you go through the paper, it's mostly just the math and the economic terms, backing up all of the stuff, and it's rooted deeply in economic theory. But the conclusion and summary of the paper is worth examining and noting. The paper basically concludes that this shift in money, this of the growth and loss of this $600, had little effect on overall employment, and that the findings actually suggest that the costs of providing very high benefits, like unemployment benefits, during downturns in the economy may actually be quite small. And that the author concluded that the possibility of raising the benefits in the future as we examine how to restructure unemployment insurance benefits might be something worth looking at. So what this in fact concludes is that what the business owners have said is not true. This provides us actual evidence that an unprecedented increase in unemployment insurance levels actually had little effect on the rate of employment growth, meaning that unemployment insurance, which functioned as a sort of non-universal base income for many people, has not done anything to cause less people to work. This inherently contradicts the narrative that government has created the conditions where people are not willing to work via this unemployment insurance. But that doesn't change the fact that many businesses are still actually having issue finding people to work for them. If you've been on Twitter, you might have come across a lot of these different posts that have had things like nobody wants to work, or all these other, pictures that have shown restaurants unable to get people to come into their workspaces. So I want to actually take a look at two different news reports. One of them that deals with one such restaurant, a McDonald's that's currently struggling to hire employees in Tampa Bay. And another is an article from eater.com that is talking about restaurants and tips during the course of this economic situation. So the first issue is that a Florida McDonald's is actually paying people $50 just to show up for a job interview, and it's still struggling to find applicants. Now, when we break down the argument from the employer involved, they say that the McDonald's in Florida is paying 50 people not to just show up for a job interview, but that's still not working and is not providing incentive. At this point, if we can't keep our drive-thrus moving, then I'll pay $50 for an interview, said Blake Casper, who owns 60 McDonald's restaurants in Tampa, Florida. To go through Casper's argument, he claims that you've got a lot of people with a lot of money and they're out there shopping, he added, and then on the flip side, we're scrambling for help. So first and foremost, I want to address the fact that a lot of people who received their stimulus checks and received any sort of benefits used it to pay for their rent, used it to pay for food, used it to pay for expenses that are going to come due in the near future. But as things stand right now, none of those are an actual issue for a lot of people, with eviction moratoriums and unemployment insurance providing a lot of coverage for people. I don't know if that means that people are out there spending money as Casper has purported, but at the very least, we can take him at his word that people are not working for him and that he's struggling to fill positions, because that's where he does have available information that is useful for us. Now, the labor shortage is also forcing Casper and other franchises to actually raise wages. Casper said that he's considering raising starting wages from $12 to $13 an hour, which is $3 going to $4 above Florida's minimum wage, in an effort to attract more employees. Casper stated, "The biggest challenge out there is the federal government and the state government are going to continue with this unemployment, because that is truly creating the incentive to not work right now." Casper said, "And how do you blame somebody? You can make more money on unemployment, so we've got to at least be above that." Now, there's also a fear element that's preventing people from applying to jobs at restaurants because of the frontline workers having to deal with the fact that we're still in the midst of a pandemic. So I want to address first and foremost this idea that unemployment insurance is creating the incentive not to work. Well, we've shown that's not the case. There is an economic paper to back that up. So if that is not the case, then what is really providing the issue here? Well, there's two factors that come to mind. One is the low wages, and two is the conditions in which people are subjected to work in a restaurant like a McDonald's. And as we know, part of that issue is the pandemic. So when we go to eater.com, we actually get an argument about the quote, lie that no one wants to work. Matt Glassman, the owner of the Greyhound Bar and Grill in Los Angeles, said unemployment has made it harder to rehire staff, but added that it's more complicated than people not wanting to work. Glassman's restaurant has been closed since last summer and will reopen in May at reduced capacity. For servers and bartenders, fewer patrons means less tips, which means that they're putting their health at risk while making less money than what they would on unemployment. Glassman says he pays servers and bartenders $15 an hour before tips, and that before the pandemic, it wasn't unusual for bartenders' hourly wage to come to $50 to $60 after tips. Now that number is going to be closer to $25 to $30, Glassman said. So one of the issues there is that people are not going to restaurants, and because of the rates at which people are paid via tips versus being paid for their labor, this can be an influencing factor when we keep in mind that outside of these type of jobs where Glassman is paying somebody $15 an hour before tips, there are still jobs that are paying just $2.13 an hour before tips come into play. If people aren't going into restaurants, there's no desire for people to work in these situations because then they're just going to be paid the basic $7.25 an hour, just like everybody else in terms of the federal standards. So that is a huge issue in all of that. But let's talk about that narrative of unemployment insurance. Essentially, what unemployment insurance is doing right now is it's providing a safety net for people so that if something goes wrong, they don't have to just rush out and take the lowest paid jobs for survival. Why would a person take any of these minimum wage jobs when they actually have a safety net that is providing them a technically higher paying job and is actually paying closer to a living wage just by staying home? So this is in fact providing an ability for workers not to stay home and to not seek out employment, but rather to give workers time to negotiate their wages and working conditions. And that is the two factors that we keep coming back to. A lot of the jobs that are not getting people to work for them have low wages and poor working conditions. So potential employees now have access via this unemployment insurance, via eviction freezes, and all these other forms of pandemic assistance to a sort of more balanced, equal footing, even though it's quite not perfect, to try to negotiate better wages and working conditions. People just don't have the same fear of losing everything, at least in the short term. In the long term, we're probably still looking at an issue where all that back rent is going to be due, and all of the other issues of how the economy is going to play out once these protections are removed are going to come back into play. But in the short term, this is preventing people from having to deal with the worst realities of our economy. Because the worst thing that can happen to people is that they just fall back to unemployment or the other safety nets that are protecting them. Now, this needs to be said, that this runs in sharp contrast to how this has worked in pre-pandemic conditions, where safety nets were not only far lower and less available to people and had more means testing, but often governments ended up subsidizing businesses over people because they created the conditions that actively forced people into taking these low-wage jobs in the first place. So quite the opposite of it being some sort of neutral statement that unemployment is just doing this bad thing. The way unemployment and other insurances were implemented and all these other safety nets were implemented actively forced and funneled people into low-wage jobs. And this is something that I will be talking about in greater detail in my next video, so please stay tuned for that. Now, I believe that during this pandemic, in addition to this unemployment insurance being able to provide that safety buffer, as well as all the other pandemic-related support and safety nets, there's been a shift in consciousness because people's priorities have actively changed, including people wanting and actively seeking better working conditions. There's an article from the Washington Post that actually breaks this down very nicely, that talks about how it's not a labor shortage, but a reassessment of work in the United States. And so even though April did show a small dip in the growth of jobs, there's actually a good reason for that is not tied to the unemployment insurance. Another way to look at this is that there's been a great reassessment going on in the US economy. It's happening on a lot of different levels. At the most basic level, people are still hesitant to return to work until they're fully vaccinated, and their children are back in school and daycare full time. For example, all the job gains in April went to men. The number of women employed or looking for work fell by 64,000, a reminder that childcare issues are still in play. So this is worth noting in the fact that a lot of people have prioritized staying home with their kids over running out and getting another job. That's a huge factor that comes into play that unemployment insurance only plays a small part in. Now, the coronavirus outbreak has had a dramatic psychological effect on workers as well, and people are reassessing what they want to do, how they want to work, whether in an office, at home, or in some hybrid combination. People who used to work in restaurants or travel are finding higher paying jobs in warehouses or real estate. So that's the wage factor right there. If you have people who would have previously worked in restaurants or travel, now they're seeking jobs in warehouses and real estate. If you had people in jobs that were in these type of environments where they had to go in, people now would prefer a job that's more stable and less likely to expose you to the coronavirus or any other deadly virus down the road. This represents the working conditions issue. And when we break it down, really, the problem is that we're not making enough money to make it worth people going back to these jobs that are difficult and dirty and usually thankless. You're getting yelled at and disrespected all day. It's hell, said Sarah, who's 31. She added, with 2 young kids, finding childcare has also been a huge issue lately. And so when we look at all this, that's really the issue. If people are going to work, they want to be paid well. They want to be treated well. They want to feel safe. And in many cases, they want the option to work from home. And honestly, who can blame people for this desired shift? In the case of working from home, people have a lot more autonomy and say over their lives. They control how they dress. They have, they don't have to falsely smile at people all day. They can continue to look after their kids without sitting in a cubicle or standing on their feet all day. They're basically in a position where they can take care of their kids and stay at home while still doing work. So given the choice between that home reality and a workplace where your boss autocratically controls your life in pretty much every aspect, sexual harassment's rampant, you have no control or stability of your hours, you're ignored, disrespected, and treated like nothing, who wouldn't take staying at home over that? You have situations where people are monitored for how long they go and use the bathroom, especially, in places where low wages are being offered in the service industry. Why would anybody take that? Further, I'd like to point out that even people who are still unemployed are actively working, even if they're not being provided financial compensation. This pandemic has allowed some people to have time to take care of their mental and physical health in ways they have not previously had. People are spending time with their kids and family, and that's something really important. And they've spent increased amounts of time focusing on home-based projects. Far from being idle, we see most people finding that they are focusing on themselves and seeing value in that. In fact, that same person that we looked at earlier in the Washington Post article stated the couple have decided to sell their suburban Detroit home, buy a camper van, and travel the country. They hope to homeschool their kids and spend more time as a family. So this family life and this self-care outside of a job that's dirty and thankless, that's providing a lot of incentives for people to change their mindset at how they view work and their lives and what's important in their lives. The assertion that's being perpetuated by these business owners and state governments that unemployment insurance has created conditions that incentivize people to not work is unequivocally false. Quite the contrary, unemployment insurance has provided a safety net that has allowed people to take jobs that pay higher wages with better conditions compared to those found in the service sector, which is the only area that's struggling to fill positions. And as I hope to show in my next video, there's also been a removal of the incentives that pushed people into low-paying jobs in the first place. Meanwhile, this pandemic has provided a change in consciousness about the priorities of life and working conditions, which I think supersedes the unemployment insurance as a benefit. People are valuing staying home, being with their kids, spending time with family, and living life over the drudgery of going into work in these places where you're treated rather poorly. And I think it actually speaks volumes that state governments would choose to remove these beneficial safety nets and effectively prop up and subsidize business interests by seeking a return to this old reality in which people felt backed into a corner to take low-paying jobs rather than expand them and attempt to explore the positive impact of ideas like this unemployment insurance. Maybe we should be exploring how something like a universal basic income, Medicare for all, and housing rights may help the economy and the well-being of people by being able to allow people to negotiate their wages a little bit better, or possibly shifting in the direction of having more democracy in the workplace, since they would not be held as hostage for their financial means. That said, I believe that this change in consciousness will persist far past any of these negative incentives that are introduced by removing any safety net. People have had a chance at self-care, at self-evaluating their self-worth, and have had time to take the opportunity to reevaluate their lives and their priorities. And that's something that, to be honest, really can't be legislated away. So with that said, if you like this video, give it a thumbs up, hit the subscribe button and bell for notifications. You can follow me on Twitter and check out my lovely Discord in the description down below. My name is Anarchist Tara, and I thank you for watching.